I believe regulations are going to come in and change everything, and I think a lot of people haven't really thought this through. So I put out a Twitter post, and I said that I believe regulations are going to come in, and I believe it will change the entire trajectory of the cryptocurrency space. I said that I think we might have seen the last cryptocurrency bull run. Now, it's very clear to say crypto, not Bitcoin. All right, so there's a big distinction. We already talked about that. If you've missed that part, go back and listen to the podcast where I kind of broke that down a little bit. Or I've made some very long-form videos with a lot of details on my YouTube channel. You can go search Mark Moss on YouTube and find those as well. But like I said, so many people lost so much money with the FTX. They have now, these meetings on Capitol Hill, and regulations are coming. The SEC failed to do its only job, which is protect people, and they are going to have to step this up. But what does it mean? Well, like I said, Bitcoin's already been deemed a commodity, but everything else is at risk here. And so when I said if, and I believe they will, crack down with regulations, then I think we've seen the last crypto bull run. And when I say the last crypto bull run, what I mean is where the entire cryptocurrency market cap just goes to the moon, like it did in 2017, like it did in 2021 again. I think that's over. I think where you can just kind of close your eyes and just buy any Bored Ape or JPEG or DeFi contract or whatever and just make a bunch of money, I think that's over. Now, does that mean that there won't ever be another one that will go up in value? No, it certainly doesn't. And a lot of people really pushed back. It was actually, I think I had like 600-700 comments on this Twitter post, which, by the way, if you're not following me on Twitter, check it out. It's just the number one, just at one Mark Moss. But anyway, a lot of people were like, oh, you don't understand, Mark. You don't know what you're talking about. If the SEC cracks down, it will just go offshore. Okay, yeah. They said, you don't understand, Mark. The SEC can't stop innovation. Yeah, okay. I agree with both of those statements. So it's not that I don't understand. I think you don't understand, or those people don't understand. And so what happens is if the SEC cracks down, yes, it will push some offshore. And yes, we'll still have innovation. But what will change is that these cryptocurrency companies, a lot of people say, well, they'll just pay the fine and just move on. It's not that easy. Because if they want to comply with security laws, yes, they'll have to pay a big fine for sure. But two, then they're going to have to file as security. They're going to have to file S1s. They're going to have to disclose everything. So like in Ethereum's case, for example, they're going to have to disclose who the founders are, how many tokens they have. They're going to have to disclose who the insiders are, who the management team is, what the pre-mine was, who kept the tokens. They're going to have to disclose what related parties there are. What's the relationship between Vitalik Buterin and Joseph Lubin? What about the Ethereum Foundation? What insider trading or insider selling happened? What other controls and interests they may have between the companies? What risks may be there? They'll have to disclose all of that, and I don't think they're going to want to. I don't think I don't want to say any. I don't think most of these cryptocurrency projects will want to disclose that. The whole point is that they did the ICO, the initial coin offering, the altcoin offering, because they didn't want to do all that. So it's not just as easy as though they'll just pay the fine and they'll just move on. No. They'll be forced to comply. It could take years and millions of dollars to do it, but ultimately, I don't think they're going to want to disclose that information. And even if they did, they disclosed all that information and they were legally able to get away with what they're doing, and they disclosed all that, then I think everybody would look at that and go, well, wait a minute. Basically, what I've just bought is a software company or a payment company or a supply chain company or a video game company. And why am I buying this video game company or software company over this video game or software payment company? So it's going to change the game. Now, does that mean it goes away? No, it doesn't mean it goes away. Does it mean some goes offshore? Sure. But you also have to understand how the industry worked. And I've talked about this before. I read actually directly from Sam Bankman-Fried's interview that he gave in about May of this year with Matt Levine. I believe it was on Bloomberg, and he basically explained that you create this protocol. He calls it a box. You create this just generic box, and you say that it's going to change the world, and you create this token, and then you trade the token to create this value, and everybody wants it because you've made it look like it's valuable. But what really plays into that game is venture capitalist. And this is a key piece here that most people just don't understand. Maybe they just don't understand how the system works. And so venture capital is where an investor invests into a new venture, typically like an early round, like an angel investor. And so imagine like Uber in Silicon Valley a decade ago or whatever, right? And so, hey, do you want to invest into my startup? Okay, what's it going to do? Well, it's going to change the world in this way, and here's how much money I'm trying to raise. And the way venture capitalists work is they typically start a fund, a venture capital fund, and a bunch of people put money into this fund. And this fund might go invest into, say, 15 different projects. And that fund locks up that money typically 7 to 10 years. And the reason why is it takes 7 to 10 years for these companies to get big enough to be worth anything. And these venture capitalists know that the majority of them are probably never going to be worth anything, but some of them will hit really, really big. And those investors that put that money into that fund have that money locked up. The only way they get that money back is some sort of a liquidity event. So one of those companies would go public, go through the IPO process and go public, and then those early investors could eventually sell their stock publicly. Or two, maybe one of those companies gets bought out, and that creates a liquidity event. Otherwise, that money's locked up. But venture capitalists love this crypto space because there's instant liquidity. So they're pumping money in, and they get tokens in return, and they can go and dump these tokens, some of them almost immediately. And they might make a 2x, a 5x, a 10x, a 50x on their investments immediately and still have more upside with the tokens they have left over. So the venture capitalists love this, which is why it's brought in hundreds of millions of dollars of venture capital so they can make their 2, 5, 10, 50x by dumping on your head on retail. And so then they spend a lot of money in marketing, slick marketing, in media, put it all over the place. You see all this news about all these tokens going higher, 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 higher in value so they can get you to buy them, so they can dump them on you, and then they all become worthless. So if you understand that's how it works, which again is how it works, I got the receipts if you want to check out my YouTube videos, and the SEC cracks down, could they go offshore? Yes, and they probably will. But most countries also have some sort of regulations as well, so they're going to have to navigate that. But more importantly, why I think we may not have another bull run is because of the venture capitalists. They're U.S.-based. Now, they love this because, like I said, they can get instant liquidity by dumping on your head. But if all this goes offshore, they won't be able to go participate because these ICOs happening offshore specifically cannot include U.S. investors. So they may go offshore to some small little country that they can get around these security laws, but the investors won't go with them. So does it stop them from going offshore? No. Does it stop the innovation? Certainly not. But what it does stop is hundreds of billions of dollars of U.S.-based venture capital money from going in, which then influences the media and the marketing and you and allows them to dump on your head. And that's why I think if these regulations go through, which I think is the most likely case, I think it ends the crypto bull run as we know it. Now, you may not like that. You've been taught, you've been told that these are life-changing protocols by these venture capitalists that have spent a lot of money on this. But as someone who studied this for over 7 years, published over 1,000 pages of research, I can tell you this is exactly how it works. And that's why I think it can change, but I could be wrong. I'd love to hear from you. Hit me up on social media, on Twitter or Instagram, at @1MarkMoss, and let me know what you think. Am I wrong? And if so, why? Don't just tell me I'm wrong. I'd like to hear why you think that. That's what I think. If you're just tuning in, you're listening to the Mark Moss Show. If you missed me, check me out on the podcast. Just search Mark Moss on your favorite podcast player for the recap of this, and that's what I got. Thanks for listening.